Hi, welcome. Wanted to take just a quick minute with you and give you an update. We've talked a lot about the market. We've talked a lot about interest rates, talking a lot about what's happening. And I wanted to bring you an update with some new quotes, as well as some information, a couple of graphics that might help create some certainty in the market. I want to make sure that we're bringing you certain content so you can make decisions based on certainty. I want to share a quote from Taylor Marr, who's the chief deputy economist at Redfin. As I share this quote, I back up in my mind. I talk to a lot of people who are wondering if the real estate market or the stock market is going to continue to be bearish or bullish, or when it's going to flip and what's going to happen. So if you're thinking about the real estate market as being bearish versus bullish, it is entering that. But this is what Taylor Marr had to say about the current real estate market. For those bearish folks eagerly awaiting the home price crash, you'll have to keep waiting. As much as demand is pulling back, supply is as well, reducing downward pressure on prices in the short run. Close quote. So we're seeing that we're having some pricing adjustments, but we're seeing that supply and demand, the demand pressure there and the downward pressure there, is causing an opportunity for buyers to negotiate and sellers to still win, as there is still a limited amount of inventory in certain categories. In this graphic, we can see that home prices are expected or being forecasted by Wells Fargo and their economists to decrease by 5.5% in 2023, and then to increase by 3.1% in 2024. What that says to me is that we're going to have another year, or maybe even up to 24 months of a little higher interest rate, a little bit of pressure, pricing adjustments, the market shifting, and then it's going to stabilize and it's going to continue to appreciate. Real estate has traditionally, over the historical run, been a great place to keep your money, as it historically continues to appreciate. And as we look at these forecasting numbers, it's showing us the same thing. So in all of this, and we're talking about pricing and pricing adjustments, let's talk about what that means if we go into the recession, or as we're in a recession by Scott's opinion. But those that are saying we're still going to enter one, or maybe it will continue, let's look at what's happened in interest rates over the last 6 recessions. Here we show 1980, 1981, 1991, 2001, 2008, and 2020. The last 6 recessions, and we show that interest rates have come down in every single recession in order to get us out of the recession. So while we're feeling that upward pressure on rates to curb inflation, at some point that will start to stabilize and we'll see rates come down, opening more opportunities for those that have been sidelined just based on interest rates. Still a good time to buy, because of those that have been sidelined just because of interest rates. So as we watch changing rates, and as we watch the market continuing to shift and looking for opportunities for you to leverage and to be able to become more stable in your real estate portfolio, we certainly want to help you with the right strategy and the right timing. As always, your strategy matters most. Who you work with also matters. Pick somebody that you're going to relate to and that you're going to be able to get along with, and make sure that the strategy is what is working. If you've enjoyed the content and you want to see more, please click and subscribe in this video. We appreciate you tuning in. Have a great day.